All right, so ladies and gentlemen, now at the Global Fintech Fest, firstly a very warm welcome to our speakers who have joined us and also to our key guests who have come in with brimming smiles and a lot of energy. What is our motive? To learn more and of course engage further. Join us as we explore the potential of digital infrastructure catalyzing a revolutionary shift in lending and payments, fostering a future of unprecedented financial accessibility and efficiency. Well, welcome to a discussion that envisions the transformation power of digital technology in reshaping the landscape of finance. What is our topic? Leveraging digital infrastructure for transformation in lending and payments. Well, we're elated that we have our great set of speakers who have joined us now. First up to moderate, we have partner IBS Intelligence, Mr. Amit Jain. Thank you, Mr. Jain, for joining us. Next up, joining us in our esteemed set of panel, MD and CEO of UCO Bank, we're talking about Shri Ashwani Kumar. Let's give Mr. Kumar a big, big round of applause. Next up, MD Risk, Compliance and Stressed Assets, State Bank of India, Shri Ashwini Kumar Tewari. So we've got two of them by the same name, but completely different work profiles. So let's give them both a big, big round of applause. Associate Vice President, Nucleus Software, Mr. Rohit Mathur. Thank you, Mr. Mathur. Co-founder, CloudBankin, Mr. Parthasarathy. Let's give him a warm, warm round of applause. CEO, Wibmo Inc., a PayU company, Mr. Suresh Rajagopalan. Let's give Mr. Gopalan a warm round of applause. Managing Director and CEO, Bank of India, Mr. Rajneesh, Karnatak. Let's give Mr. Karnatak a warm round of applause. You know, some of the biggest names today on the stage, I must say, Mr. Jain, it's going to be a mighty task ahead. I don't want to say further than that. Maybe request you all to kindly be seated. And Mr. Jain, over to you to curate it forward.
I think you made at least some of my task easier. I was going to spend 5 minutes taking everyone's names, the designation, and the bank names, right? So I think that would take away 5 minutes of our 30, 40 minutes of this full packed panel. So thank you, everyone. Let me just reiterate the topic for today's discussion. It's a very interesting one, which is, bringing both the worlds of payments and lending together, right? And many of you must be wondering, why do we use and why do we have payments and lending together in the same panel, right? But I think, the remarkable technology transformations that have happened over the years and over the decades seamlessly, which has woven both these very, very distinct and unique topics into one called for one panel discussion, right? So especially the innovations in payments. So I think, without further ado, I have a set of questions for my esteemed panelists, and I've broken them down into talking a little bit about payments first, and then I want to talk about lending, and then I have like a sort of a fastest finger first sort of question for all of them, right? So starting on payments with Suresh Rajagopalan, as we all know that UPI has set the bar high for real-time payments, right? So while my question has something around innovations in it, but it's open to you where you can talk about what has the journey been so far, and and therefore also the innovations.
Yeah, thank you. Thank you for inviting me to the panel. Very good afternoon to all of you. So the UPI has been a phenomenal journey for the last 6-7 years. But it has taken off after the COVID, especially on the the ease of use thanks to the UPI QR code. If you see the original construct of UPI, which was P2P, and in the last probably I think the P2M transactions has overtaken. That shows that the confidence in the ecosystem has substantially increased, which makes the the merchants adopt this newer type of payments, which is also sort of the flywheel starts from payments, then sort of allowing the merchants to get some small ticket credit and things like that. So the MSME kind of a business gets thrown in thanks to this UPI ecosystem. So you get to see the lot of data inside about these the UPI transactions and things like that. So I would say that I think it just UPI is still scratching the surface. The kind of transaction which you will see, the adoption is today just 250 million unique consumers have used. Probably, we have to see another 250 million consumers who are sitting in different parts of the country and still not using this application. Probably will start using this. I think I would consider this the UPI adoption into sort of 3 buckets. One is in terms of the reach. I think it has allowed, thanks to the UPI Lite, UPI 1, 2, 3, so different types of, without internet, with Bluetooth, without, so various form factors and smartphone, feature phone. So all kinds of use cases have come, and you will see that the reach will be far more in terms of going into the tier 3, tier 4 cities, not even tier 2 cities, tier 3, tier 4 cities. The tier 3, tier 4 cities are also seeing the e-commerce transactions, the wave. So which you will see that the uptick in terms of the P2M transactions going forward. So that is one is the reach, that is on the payment side. But I think the reach, I would also consider that as what are the other types of modes of use cases which we can launch in UPI. Today, I mean, yesterday you would have seen that the credit lines being linked to UPI, it's excellent use case, right? So it was just-in-time funding on a PPI was abolished by RBI, but this is the right move in terms of giving a credit line and linking that credit line onto the UPI line, so that as a user you can start accepting these payments because there is a credit line behind the there is a authority behind those credit lines. So that is the access is not just in terms of the payments, the access is now extending towards overdraft credits and other form factors.
Sure.
Second is in terms of the reach, which I talked about, the tier 3, tier 4 cities, but also reach in terms of the newer forms of technology, like the form factors like smartphones, smart devices, the smartwatches. If you see the number of smartwatches enabled with these devices, so the next set of changes you will see using these tap and pay devices. And accepting these UPI payments and things like that. So the ease of use and access, that will become the next set of changes. The third is, I think, very important, which I generally, I was talking to the panel members offline. The fundamental problem today is the identification of the beneficiary, or the identification or know your customer is the biggest problem for the industry. Banking industry. So if UPI use cases, non-payment use cases, support these kind of identification of the consumer and authenticate them using some of the behavioral based biometric authentication and allow them access. So the OTP, the frictionless flow can enable, and the ease of use of these transactions will improve. I think that's in terms of the reach, access, and in terms of the data. Today, if you look at the number of transaction which you saw that in a month now 10 billion transactions, and I think Dilip has been saying that we will touch 1 billion transactions per day. So the days are not very far. Maybe in a couple of years we will reach with the credit being included as part of the ecosystem. Sure. So the amount of data that gets generated and then using that data to provide low ticket credits or MSME credit, which is more than $15 trillion kind of an opportunity for the banks. So how do they enable the growth of credit growth in this industry? I think if you ask me, these are the 3 big steps in terms of these opportunity.
I think we have a very, very interesting construct to our panel, right? So we have 3 individuals representing technology firms, and then we also have 3 individuals representing the banking fraternity, right? So from one technologist to our Mr. Ashwini Kumarji so while Suresh did talk about certain challenges and certain way forward, so from a bank's perspective, what role is the bank playing in terms of the instant payment space? And from a current future perspective, you can throw some light.
See, if we are talking today about UPI or payment space, I think bank has a very significant role to play. ever since the evaluation of that UPI or the payment space has started. Because role and contribution of bank is very important from 3-4 points. Number one is the technology. So banks are bringing in the technology and platforms, interface, networks which are being used for the payment space. And that is one way the payment space or the payment volumes are increasing with the use of the technology, networks and everything. Second thing, bank is playing a very important role of payment and settlement as well, because without that it is not complete, it will not be a complete transaction. So instant payment and from the sender's account to the receiver's account, that is also affected. Third, bank, the role which bank, very important role which bank is playing is about the user adoption. Because customer awareness, customer knowledge and bringing customers onto digital platform, banks are playing a very vital role in that. Another thing which I see the bank playing a role in payment space is through innovation and partnership with the fintechs. Today, if I talk about any customer, he wants one-stop solution for his needs, for making all types of payments, maybe financial payments, maybe purchases, maybe going to the movies, booking movies, or maybe investments, wealth management, like buying insurance. Banks are integrating with the fintechs. There are many fintechs available who are giving services. So banks are currently playing a significant role for changing the behavior or bringing all our people and the customers into the payment space. If you look at the role of the bank, which banks are going to play, your second part of the question. If you look at the data recently shared by NPCI, only UPI transactions have touched, I think, 10 billion in a month. And few days back, we were talking that in 18 to 24 months, it will touch 20 billion. But with this announcement of credit lines available through UPI, I think days are not far that we will be touching 1 billion transaction very soon, because it was a demand for a long by our customers, and it has now RBI has permitted. Every bank will now go to the board, approve their policies, and once these are made available, I think adoption of UPI will be huge. And banks have to bring an again technology stack available to make this also available to the customers. Second thing, India is talking about cross-border transactions and internalization of rupee. And herein also, I think the payment space bank will have a significant role to play. And as we move ahead, the way the country India is partnering with, like recently we had a in the UPI space we partnered with Singapore, Sri Lanka, France, even Japan is also interested in going with UPI. So only UPI is one space which is going to require huge amount of payment mechanism apart from other available solutions. And bank currently are providing and going forward will also continue to provide all those services. Banks have to probably advance their technologies, bring in the capabilities within them to make sure that the customer-centric services which are featured basically for ease of doing from the angle of the customer, from the angle of the banker, from the angle of the vendor. And probably that type of experiences banks will continue to innovate and bring in as currently we are doing.
Got it. Thank you so much, Ashwini ji. Now, I think shifting gears back to some, lending related volleys. So over to, I think, my friend Mani. Mani, if you can talk a little bit about, I think while we've spoken a little bit about the innovation in the payment space and the catch-up that the payments have to do, in terms of, the credit gap in India and how, can you just tell us the lay of the land and, anything that you want to throw around the credit piece?
Okay. Is it audible?
Yeah.
Amit, thank you so much for providing this opportunity. Hi, this is Mani from CloudBanking. So it's very difficult to talk after post-lunch, right? So I can see a lot of sleeping faces there. Anyways, and
If you start giving free loans, I think then maybe.
Another thing is I'm an odd man out. If you can see my dressing sense, apart from panelists and then gray hairs, right? We are the techie guys, so we'll be in t-shirts. Anyways, so coming back on the credit gap, it's a very interesting question where if you see the research paper says that the credit gap in India is more than $500 billion, right? It's another $1 trillion industry. The lot of numbers is booming up, right? So we did an analysis on why it is like that. So we started digging why there is a huge credit gap in India. And if you see the MSME space, hardly 14% is getting lending from formal sources out of 6.3 crores of MSMEs, right? And so the SM, and another data, interesting data is how all the NTC is, right? So it is more than 5 crores of MSMEs is in under NTC, so new to credit, right? So then we start digging analysis why they are not able to give loans, right? Financial institutions, why they are not able to give loans. So the credit gap is huge. So the MSME is going to the bank, and the bank is asking for growth. Show me the growth for the past 2 years, right? And another interesting data is if you go to the GST and see the data for the past 2 years, only 14.8% of the MSMEs have grown for the past 2 years. So there is very short percentage of the growth has been in the GST data source. So it is a chicken egg, right? The MSME goes and asks for lending and bank is asking for growth. So there is a huge gap, right? It's a chicken egg. And then public sector bank is one of the important player in the MSME market. And if you see what is the solution behind it, right? So we all seeing there is a huge gap. The solution is the MSMEs can get loans on the short-term loans, right? That is one of the possible solutions that we are doing it. And we can also reduce the cost of acquisition from the lender's perspective also. Now the cost of acquisition has become huge, and so the alternate solution that we can give to them is basically give a channel partners for acquiring more set of customers, number one. And then the cost of underwriting can be much, much better by integrating with a lot of AP players like us. And third, the disbursement is become again a pain. See, if you go to a normal financial institution, the disbursing process itself is huge, right? They will download that as an Excel sheet, send it to the bank, do the disbursement. So it's a painful process for them to do that, where there are a lot of stacks being available, and of course the collections, right? So one of the interesting topics that we had was every fintech is coming to this festival saying that we can able to disperse a loan in 10 minutes, right? But you ask, can you do the collection in less than 10 minutes? It is not doable, right? So building collection models will help them to do a better, reduce the cost of acquisition also. So there are multiple ways we can help the credit gap.
Sure.
Yeah.
I think it is always easy to lend, it's always difficult to collect. Ashwini ji, over to you. I think Mani spoke about, the SMEs playing a critical role, but there are SMEs or people with no credit history, they also need to be lent money. So what are the solutions? Is alternate data a solution, or how alternate data could help make better credit decisions for the NTC segment?
Yeah, thank you. Good afternoon, everyone. As he explained, it's very difficult to hold attention in topics like this. And the question was raised, why 3 public sector bankers and 3 technologists? I doubt whether everybody can be called a technologist or whatever the definition is. So maybe many of them are our vendors already, so they're not trying to sell to us. Thank you. Sorry. So they are our partners already, so they're not going to sell to us here by being on the panel, so that's all right. But it was, it's interesting the way the panel was constructed. And when Amit sent the question, and he was in London, by the way, and I asked him, are you going to tell us what you're going to ask, or we are going to answer what we want to answer? So nevertheless, he sent us a set of questions, and the question he sent me was MSME without credit history. That's a real interesting point. And for me, as a very senior banker, I think Mani raised the point, and he asked us separately as to, looks like I am the youngest. So I said, we three public sector are clear, but you can check with the other two. So, nevertheless, so the question is that when I started my banking way back in 91, that time there was no CIBIL, and for a long time there was no CIBIL. And how we were lending to MSMEs, we were asking for paper balance sheets, financial statements, etc. And our only validation was a chartered accountant's audit certificate. And when I grew a little senior as a field officer, as we were called then, and I went through that audit certificate, and it said that these figures of receivables, creditors, debtors are based on management giving us this information. We depend on the management's data, and we have not independently validated it. So I used to think to myself, then, what are we talking about? I mean, this audit certificate is just a certificate, perhaps, but that was all we had. We had no corroborating data. So the emphasis was essentially on going to the unit, trying to understand the process, talking to the customer, and sometimes some of us used to go to the market actually and just validate that, okay, this product, does it sell for this price, that price, who buys? So it was all very, very individualistic. There was no organized way of data which was available. Subsequently, when data started getting available, it was listed companies, it was all Chris Infect kind of sources, which were not suitable to the kind of MSMEs we dealt with. So that's where we came from. And that taught us that in MSME scenario, while digital is today the buzzword, the key operative word is physical, that means in touch. If you're not in touch with an MSME, if you don't establish a relationship, I fear that our lending will not go well, ultimately. Even if we are able to lend digitally, as Mani said, collection, that is a difficult part. And it won't happen unless we really understand the MSMEs. And we have to understand the entire family, actually, because some brother may be doing something else, somebody else will be doing something else. So we look at the entire family, what are the collateral, what is the house. All of these features are tough to actually convert straight to digital. Having said that, he talked about a data point of 65 million MSMEs, but out of that, about 2.3 or 2.4 million are registered on Udyam, which is the Government of India website, which we necessarily have to get registered on for giving many of our loans linked to the government for subsidies, etc. But nevertheless, 6.5 million, 6.5 million, or sorry, 6.5 crores or 65 million. The credit bureau data says that about 3.14 crores, so 31 million of those have one trade, which largely would be inquiry. So therefore, there is no history. Only 1 crore or 10 million have some kind of a history. So that's the operative word. That means there are 5 crores out of those 6.5 crores who don't have a credit history. So we necessarily have to look at alternate sources of data. And today, the interesting thing is out of these 6.5 crores, about 90% require less than 10 lakhs. So which means the bulk of the guys are micro. They're not even medium and small, or they're all micro, which means mom and pop stores, small shops, household kind of activity. Now, how do you handle these guys who have no credit history, whose ticket size is very, very small? So the government has come out with some schemes like Swanidhi, etc. Some of you might have heard about them, where the vendors are simply put on a website and they have a registration done, and that's it. And we have to simply lend digitally, and digital documentation as well. So the alternate source of data, now people talk about GST, but GST again is spreading, still not fully spread, and many of these people may or may not be registered because the minimum turnover is 1 crore. So below that, most of the people are not registered. So though GST is an important alternate source of data, which we have started using, and of course there's a consent element there. So unless we build a journey which is very, very smooth, it's very difficult to get consent and draw the GST data every time. You have to get a consent OTP every time, not once. And similarly, there are other sources. For example, if we have somebody, I mean, with account aggregator, I feel, though banks are the most threatened by this, but there are also elements where the banks can use this data, provided we get the customer to register on his deposits, on the mutual fund or insurance, and each of these data points actually tells us that the customer has disposable income. Even if there is a small insurance policy, means that they have some disposable income. The operative word in MSME lending, as in any individual lending, is the availability of income to service the loan. If the income is not available, then it is very difficult for the loan to be serviced. And in the absence of credit bureau data, this estimation is what actually is the key challenge before us. So as I said, account aggregator could be one very important piece, GST is another. Then there are other things like the account itself. So if we have an account with us, or if he is able to share the account statement from some other bank, or any other cooperative bank, that also tells a lot of things. So credits and debits and where are they going. If you're able to parse that and do some analysis on that, I think that also tells a lot of things. So in the bank, we have developed some models, but frankly, let me say that the most important weightage in all the models, end-to-end digital, which we have, or digital and partly in the branch, most important piece still remains the credit bureau score and the various trades in the bureau and the various inquiries in the bureau, all kinds of things in the bureau. So to say that we remove this and then are able to devise a very good model hasn't been tried well at scale, but we are trying to do that in these schemes like Swanidhi, schemes like internally we have developed some small value regression models which we are converting to AI/ML as well, and trying to use as many data points as possible. Still work in progress. So I guess, and people say that you can even take the mobile history, etc. But I have to warn everyone with the DP now in place, I think we should be very careful as to if we want to parse the entire mobile history and look at what apps are downloaded, etc., etc. The purpose we have to establish as the significant fiduciary, banks have to establish the purpose for every single time you use the data. Otherwise, any time we can be levied with a big fine, etc., and we don't want to go there. And as a public sector bank, we have to be doubly careful. So therefore, these kind of data where we use the mobile history, I think those are still difficult for us to start doing that. But we're working on all of that.
Sure.
Thank you.
Thank you, Ashwini ji. I think building from where you left a clue around ML and AI, and I think no session can be complete without the use of word AI. So, over to you, Rajneesh ji, in terms of, ML and AI algorithms are often being used from an alternate data or the analysis of the alternate data. So any thoughts on that, or, how do we, remove the bias, or how do we ensure that there's no discrepancy or transparency issues? So anything that you want to throw a light on from a Bank of India perspective or in general in the industry?
Yeah, good evening, everyone. Thank you, Amit. Thanks for the question. MI and AI, very important. As you know, digital banking, they are all the key to digital banking, fundamental to digital banking, which is happening all around. So when we are seeing today the entire banking system and financial services also evolving with digital banking happening so much. So not only NBFCs, but private sector banks, even public sectors banks have gone into digital banking, both on the asset side and also on the liability side. But as far as the underwriting part is concerned, the MI and ML is being, AI and ML is being used for that. And lot of rule engines are being populated over there. So many times what we are seeing over there is opaqueness, lack of transparency also is there. So for the end use, which is the consumer, the customer, or the borrower who is coming to the bank, many times he does not know why his sanction has not happened through the digital lending, or the no has come, or maybe he has asked for a personal loan of which is say 20 lakhs and the sanction has come for only 10 lakhs. So there is lot of opaqueness also over there which is happening. So, but however, having said that, there are many market reports and other reports, published reports, which are now saying that in the next 5 years, digital lending will be nearly 10% of the total loan book of the banking system. So if you see the latest RBI data which is there, the total loan book is around 148 lakh crores. Even if you say the 10% out of that, it comes to around 14 lakh crores, which would be there, or digital lending in the next 5 years. So what I see personally, the way digital lending and digital is going around, especially with NBFCs, private banks, and now more so with public sector banks, is that ICI may come out with a segmentation reporting also in the audited balance sheet, like we have presently. Like we have to report retail segment, then wholesale banking and treasury segment. Maybe they will be asking brick and mortar, what is your book brick and mortar, and what is the digital banking book to the financial institutions going forward in the next 4 to 5 years. That is another thing which is there. But having said that, I would also like to say over here that banks are also trying to do the entire RAM piece, which is the retail book, agriculture book, and MSME book on the digital lending. So on the retail side, lot of personal loan is getting into digital, agriculture loan is getting into digital, housing loan, vehicle loans are getting into digital, even gold loans are getting into digital. In agriculture, KCC and both the tractor loans are getting into digital. MSME, as Ashwini ji also said from State Bank, that lot of MSME is also getting into digital, and there is a challenge in that with respect to the data which is there. So as far as the data part is concerned, the rule engine is concerned, presently not only banks are taking care of the income, which is the income tax return or the salary slip. We have gone beyond that to the sales and purchase, the GST and other things for the entire gamut, whether it is a personal loan, whether it is for retail loan, agriculture loan, or for the MSME loan. But the thing is that the key four stakeholders for any digital lending under this underwriting piece are: one, the borrower, the customer; two, the financial institution, it may be NBFC, bank; or the third stakeholder, important stakeholder, would also be the auditor. Like the auditor also will be doing their audits with the bank's balance sheets, and wherever the digital lending is happening, they also want to see what is the rule engine, what are the algorithms which have been used over there. So that is another challenge. And fourth important stakeholder, not to be said, and most important, is the Reserve Bank of India, which is the regulator. So they are also very keenly looking into what is the rule engine being adopted over there. The SSMs are there in the banks. To give you an example, every time we are coming out with a digital project, they want to check what is the rule engine, what are the AIMI we have used in that sanction while we are giving the sanctions. Another big challenge which the banks are seeing presently is when we are back testing the data, we say that CIC score 700 and below we will not sanction. But sometimes when we do the back test of the sanctioned loans, we see that 680 has also been sanctioned. Those slips ups are also happening within that data. So these are all challenges which are evolving over the period of time. If you see the banking which has evolved over the years, when I joined the bank, say in 1994, everything was physical. Like if a person wanted to have some housing loan, he used to come to the branch. We would take his salary slip, his income tax return, details of the property he wanted to purchase, and then we will call him after 3-4 days to convey to him whether we want more paper or what kind of sanction we would like to give. So at least he was communicated immediately there and then whether he is getting a sanction or not, or what is the amount which he is getting the sanction. Then the evolution of the banking happened further credit, that underwriting started happening at the back offices, underwriting centers at the back, not at the branch level. Then little bit of more opaqueness came because the papers started going at the back to the underwriting center. So then the customer was not aware why his sanction is not coming. Branch used to say, "Aapka sanction nahi hua, your sanction has not happened." Or if he wanted a housing loan of say 1 crore, his sanction came for only 60 lakhs. So there was one level of opaqueness which came. And now it has evolved to a digital. When the digital, he is going onboarding through a digital channel platform of the bank directly. He is putting all his data, whichever is required over there, whether it is his IT return, whether it is his Aadhaar card or PAN number or CIC score, whatever is called out by the bank, and that rule engine which has been made. And suddenly in a few minutes he will get a pop-up whether his loan has been declined or he requested for a 10 lakh, the personal loan has come only for 6 lakh. So there is total opaqueness over there. So these are the challenges which we are facing on the digital MIA and AL also. Wherein we need to give more clarity to our customers also with the reason why it has been dropped, declined, or whatever the change which has happened. So these are the things which are evolving and which will take some time to happen to give it more fairness in the system and more transparency in the system.
Got it. Thank you, Rajneesh. Rajneesh has left a good ground. He's spoken a little bit about the challenges. He's taken us from a journey where we used to go to the branch and then where we moved digitally, and also some challenges he left with us. I think it's opportune time for you to then tell us, how to solve these challenges from a digital lending perspective. What is it from a trends, innovation, and what we can expect in the coming days, at least from an Indian digital lending state.
Thanks, Amit. So thanks for the forward-looking statement. So I think we've heard the leaders talking about where are we here today. So we all agree that the lending market is growing. I think it's growing rapidly. So we'll estimated, we are hitting $515 billion by 2030. And I personally feel that we'll be able to meet that mark beforehand. And the reason is that, we have so many, the customer today, it's creating so much digital footprints that we have an opportunity to use this data that's being generated by the customer and see how we can, reduce the TATs. So one of the most important things will be the data analytics techniques. So we have customer data, we have financial transactions data, we have social media behavior, we have his online banking habits. All these combined, through data analytics, you can actually derive very valuable information where the lenders can use and to make some sound credit worthiness check and some decisioning at that level. At the same time, I think AI/ML, of course, we need to be very precise on what modeling we do. But with AI/ML, you can reduce the TATs on the underwriting altogether. Plus, AI/ML can also increase the accuracy of your fraud detection. So, you can actually estimate that which customer can go bad, which is a good borrower. Also, you can, customize your product to the need of your customers, right? So you have tailor-made product for them, meeting their needs. And I think lenders can take very sound decisions on the lending practices, right? So that's on the technology side. But one thing I would also like to bring is that I think everyone in this hall, are carrying a mobile phone, and we simply, do not carry our wallets now. So people are moving towards, mobile-first approach. Today, where we stand, I think around 600 million people have access to smartphone in India. I think it's 46% of our total population, and which is growing as we speak. Section of the pyramid are also, getting into the digital transaction world. They are building up trust in digital lending. And with UPI ecosystem spread along, I think we will have an opportunity to hit the lower end of the pyramid, give them credits, right? We already have a step being taken of pre-approved credit line via UPI. I think that is something that can be explored. I think that is a trend that I feel will come into existence, and will be able to even disburse credit to the bottom of the pyramid. The customer can repay through UPI, right? So I think those will be something that will be sailing on to the UPI wave that is currently in India. I think we have crossed 10 billion, so I think for sure it will help grow the credit in the market.
Thanks. Thanks, Rohit. I've just been informed by the organizer that we've been an efficient panel. We have 5 more minutes left. So I think I have one question which everybody can, if they can answer, right? So I think looking ahead, I can start with Suresh maybe, because looking ahead, what is that one technology or one trend or one challenge, anything that you believe is the most important for all of us to watch out for in the next 2 to 3 years, right? So it has to be one, but.
Yeah, I think the technology related to fraud and risk management, because any growth can happen if you have a proper fraud and risk management and controls in place. So all the technologies which all the panelists have used in terms of alternate data source, AI, ML, data models, all of that combined, put together, create a composite trust score for a consumer beyond the CIBIL and whatever, and the ability to trust that score and then do all the activities for that. I think that will be the best technology I would like to have.
So fraud and risk management is what you said. Ashwini ji, one trend, challenge.
See, if currently we are relying on CIBIL and various fragmented data from different sources. I think going forward, we can see one technology or one solution where we integrate the entire 360-degree customer behavior into one platform, and we get to know the in and out of the customer's behavior. I think that will be a big evolution if we get into that.
One customer view. Money, anything from you?
So basically, I write daily on LinkedIn, and one of the important posts which which has become very trendy, is the fintech trends in 2023. That is, from my perspective, digital lending infrastructure is one of the technology trend that I'm seeing. When I say, I don't want to put it very generic to get it into detail. For a financial institution to go digital, right, they have to integrate with a lot of, 50 APIs, right? Say, for example, if you take Aadhaar as an example, if you go down in the first floor, right, for Aadhaar API itself, there are 20 to 30 vendors are there, right? So for a bank or an NBFC, to whom to integrate, for what are all the failures are there, right? So for every bank or an NBFC to go digital, they have to integrate with minimum 200 APIs to evaluate, right? So a digital infrastructure to make sure a seamless lending experience is the next big trend. Yeah.
Excellent. Ashwini, I know it's going to get tough for Rohit.
Yeah, so I'll go on the other side of the fraud and risk. I think the technology we should look for, and which we are surely searching, is the social engineering aspect. As digital explodes in India, what we have seen is all varieties of frauds on digital side on customers. And if we are not able to protect the customers against that and get their money back when lost, I think that would shake the trust in the entire system. So I think this is still early days, but it's very less reported, less talked about, and that's one thing I would like to talk about. And of course, the other part is the entire data privacy. When we want to know more about the customer, the question is, does he want us to know more about him as much as we want to know more about him? So those two things, in my view.
I think just very quickly,
sure.
I would just like to add one more challenge that I personally have seen. So I've seen that, and the stats says that 70% of your digital transformation are not able to meet your desired goals, right? So everyone here, I'm sure that you, in any way or form, you must be contributing to a digital transformation. So what we have seen is that whenever we talk about digital transformation, we talk about technology and the cutting edge technology, but somehow we put the robustness of the overall platform on the back burner. So it's basically that you do something in haste, but when it comes to growth, the overall architecture fails. So I think from my side, a contribution would be that I think while we are getting into a digital transformation, it's very important that we also evaluate the robustness of the overall platform, the design, the architecture, so that when the growth is being made, you do not have to take a U-turn after traveling, say, a couple of miles, right? So that's, I think it's very important, and I see it's a challenge now because people are really excited about digital transformation, but we miss upon some of the basics, and we have to take a U-turn and then redesign. So.
Sorry, Rajneesh, I've not forgotten your chance.
Yeah. So Amit, with the technology and transformation which is there, the one most important thing which I feel is the personal hyperionization which will be happening. So that will be something which is the most powerful thing which will be happening with so much of data and information through technology. Personalized hyperonization for the individual, whether it is lending, account or anything, even if you want to buy a product, say you want to buy a pizza, maybe the AI will give you what kind of pizza you would be requiring, the kind of information the data will be having about you. So that is one of the most important and fundamental thing which will be happening for me.
Thank you, Mani. So this becomes the top 6 trends for your LinkedIn post for tomorrow. Thank you so much, everyone, and the audience. I think we don't have any more time for any more questions, but I think our panelists are going to be available for the next couple of days, hopefully, to answer your questions. Thank you so much.
Thank you.